I'm Yahoo Finance Executive Editor Brian Sozzi, and you're taking a look at a live shot of the opening bells on Wall Street on this Tuesday morning. Elite ringing the bell at the New York Stock Exchange. Freshworks getting things popping over at the NASDAQ. Markets are closely monitoring the battle between President Trump and Fed Governor Lisa Cook. Trump said late Monday he would remove Cook amid allegations of mortgage fraud. Cook has dug in, saying she will not resign and Trump doesn't have the authority to fire her. We initially saw a pop in safe haven gold prices and a rise in treasury yield as investors grew concerned about Fed independence. Let's get a check on the markets against this backdrop of the battle for the Fed's future. Yahoo Finance senior reporter Brooke DePalma is at the NASDAQ in Times Square. Brooke.
Good morning, Brian. Certainly, we're seeing all three major indices in the red this morning at the open. The Dow, NASDAQ, and S&P 500 all in the red. The NASDAQ leading that downward momentum, down about 0.2% as we make our way into today's trading session. I also do want to take a look at gold because largely what we're seeing is that move higher this morning after this announcement that the potential firing of Fed Governor Chair Lisa Cook could be on the table. Now, the market's largely seeing a muted reaction this morning. UBS saying in a note this morning that could be because of the already precursor of Trump's prior comments foreshadowing this move, as well as limited conviction on whether or not Trump actually has the legal grounds to follow through on this move. I also want to take a look at Bitcoin. We're seeing Bitcoin fall lower this morning as well, below that key 110,000 threshold overnight. We also have Ethereum. Ethereum is moving lower this morning as investors are really sort of taking on this risk off sentiment this morning. We saw Ethereum fall more than 3% this morning. And also want to take a look at gold. Gold futures right now are moving higher as perhaps investors are seeking safe havens right now. But once again, all three major indices in the red as we make our way into today's trading session.
All right, thanks so much, Brooke. Appreciate it. All right, as I mentioned at the top of the show, markets are closely watching the battle between President Trump and Fed Governor Lisa Cook. Here's how to think through this as an investor. First, Federal Reserve is an independent agency outside of the government. If Trump ends up winning this battle, it could go a long way in undermining a degree of confidence in the Fed to do its business. That may have ramifications for bond yields and the U.S. economy, given our bloated debt position. Here's what former U.S. Treasury Secretary Larry Summers told me on this situation.
For a regulatory official to be demanding the resignation of an official outside of the purview of their regulation is, I think, something that's close to unprecedented, at least in recent years in the United States. And I would hope that there'd be expressions of concern from the judiciary, from the business community, from people of goodwill everywhere.
Second, it's clear Trump wants to remake the Federal Reserve to contain more doves or those that support lower interest rates. Should Cook be dismissed, Trump could effectively stand to gain a majority soon at the Fed, one composed of members he has appointed to these key jobs, with Jerome Powell's term set to expire next year. That could support higher stock prices in the near term, pros tell me. And three, while this situation is a headline grabber, it shouldn't detract from other areas of focus in the markets. Chief among them is a likely market-moving earnings report Wednesday evening from AI chip darling Nvidia. Nvidia comprises 8% of the S&P 500, and what it posts and says on its earnings call is crucial to maintaining the summer rally. On the opening bid roundtable today, Caleb Silver, Investopedia editor-in-chief, and Yahoo Finance senior reporters Brooke DePalma and Inez Ferre. Caleb, always nice to see you. Coming down the block here with you, my man. You and I have been doing this for a while. I can't say that I'm surprised that the market hasn't reacted a lot to this Cook news. What say you?
I think people have just become desensitized to these headlines and to what we've seen from this administration, because it's really day in, day out. We get something new, an unprecedented move. You were just talking to the former Treasury Secretary Larry Summers about that. We haven't seen a president try to remove an appointed and elected government official since Nixon tried to do it to the Department of Commerce years ago, and that didn't end very well either. So I think investors are just, focused on other things. And those other things include the path for interest rates. They include the fact that profits are actually better than expected. Surprise, surprise there. Also, we have better tax initiatives and regulations for corporations right now, and stock buybacks are headed towards a record high. So if you like that as an investor, you're getting it. And that's why we've seen record highs recently. And now there's a little bit of shakiness, obviously, in the markets because of the trust issue.
Caleb, I'm not going to sit here and dismiss what we're seeing between Cook and Trump and Fed independence. It's all very important. But to your point, bottom line, corporate profits, they've been strong. And that's what moves markets.
Yeah, corporate profits are strong. And also this key metric that I've been obsessed with lately, which is revenue per employee. You look at some of the stocks that have been the best performers over the last few years, they're getting the highest revenue per employee. And the top of that list is Nvidia, of course, almost $3 million per employee. And that's the metric that I think a lot of investors are focused on. How much profit margin can these companies squeeze out while these regulatory doors are wide open right now? And the government is getting into private companies' business right now as well. So that's muddying the waters a little bit. But if you look at corporate profits and the trajectory, it looks really good compared to what we thought it might be, and better than expected is always going to get investors enthusiastic.
And Inez, having said all this, we did see a move in gold. We did see dollar weakness off of this Cook Trump battle really blowing up here.
Yeah, we did. We saw gold ticking higher. We saw some weakness, as you mentioned, in the dollar. I would watch the dollar definitely, and I would also watch the bond market as well. We haven't seen too much of a move on the long end of the curve. But look, this does definitely raises questions. What is happening at the Fed? The fact that there's also been no real communication from the Fed. This also begs the question whether Jay Powell will come out and say something, and what recourse Lisa Cook has for saying, you can't fire me. There's been nothing said about the alleged mortgage fraud either, although everyone knows that this is also politically motivated. There are a lot of questions about what is going on inside the Federal Reserve right now.
Brooke, I am surprised. You mentioned this at the top of the show, but I'm surprised to not see a bigger move or a move higher in crypto, given everything we've seen off of this battle.
Yeah, well, we are seeing crypto move lower, largely, following the sell-off that we saw on Monday, and that's continuing momentum. But it's been quite interesting to watch Ethereum. That was one of the cryptocurrencies that we were watching so closely over this past summer as it soared, especially due to that crypto week that we saw on the Hill take place. Now what we're seeing as far as Ethereum go is it move lower. We're seeing it sell off about 3% this morning as we make our way into today's trading session, and largely this sort of risk off after investors were willing to take on so much risk making their way into the summer, especially after we saw so many companies beat expectations that the street had heading into this summer. And now we're seeing that pulse perhaps change a bit. We're seeing, of course, gold futures move higher, Bitcoin sell off, and that typically is showing a bit of caution among investors.
Caleb, I'm going to touch the third roll here. I'm going to put this hot potato to you. Don't we want to see more doves on the Federal Reserve? They lower rates, that fuels the economy, stock prices go up higher.
Yeah, well, in the near term, as you said, stocks usually do go higher because lower interest rates just makes cheaper money. You especially see that in small cap companies that have a lot of debt compared to how much profit or how much revenue they generate. So it can be a near term momentum builder for the market. Not that the market needs much more momentum. It has plenty of it behind the sales here. That said, a study out of our buddy Ryan Dietrich at the Carson Group says when the Fed lowers rates and markets are around 2% near all-time highs, the market's usually higher 6 months and 12 months later. So this could actually be yet another boost for stocks in the longer term versus just the near term. I think the near term concerns are about the debt and the deficit, but we've been worrying about that, for 50 years. And the other near term concerns are this big 5-letter word that we keep talking about, and that's trust. Trust in our capital markets. And you may not see it in the stock market right now. It gets all the attention anyway. But as Inez and others are saying, look at the bond market and look at the dollar. That's, I think, the third rail, the hot potato, so to speak, for this administration. You saw it before. When the bond market got a little squirrely and we saw yields pop, you saw the president pull back a lot of those tariff threats. And I think that's kind of the guardrail this time. Then Trump 1.0, it was the stock market. Trump 2.0, I think it's bonds and the dollar down about 13% against other major currencies.
No, yeah, and shout out Ryan Dietrich, love his work. But good points there, Caleb. This is a very cute but confusing time for investors. A lot going on. Caleb, what do you see on Investopedia? What do they come there and what are they searching for right now? I imagine folks just need a ton of help across many different asset classes.
Yeah, yes, and they also are interested in what's going on in the political landscape right now. So we've seen people digging through our long definition of the Federal Reserve Act. You know, how Fed governors are appointed, how they can be removed. So all of a sudden, people are becoming Fed experts, which we love to see. But also, Nvidia is gathering a lot of attention. I was looking at the biggest concerns for investors as of our latest sentiment survey. We do this every 2 months. We do a survey to our readers. Tariffs were the number one concern, but that's abated a little bit. Inflation, and then the accuracy of government data, given those huge revisions we saw to the Labor Department reports, and then Fed independence, and that's creeping up. You saw that with the president threatening to oust Jay Powell, and now the president firing a Fed president, another Fed governor. You're going to see that rise. So people are concerned about that. They're concerned about the independence. That said, they're not sure what it means for their portfolio long term, which is this big question we keep talking about. If the Fed's more dovish, if the executive branch has more control over our central bank, is that going to be a good thing for corporate profits long term? And right now, the trust matter in terms of how our readers feel about this administration, I'd say about 50% say they don't trust this administration to safeguard the capital markets going forward.
And as this Nvidia earnings report out tomorrow, it has to be nailed. Not that it wouldn't have to have been nailed a month ago, 2 months ago, or prior quarters, but you get the sense, just given how fast markets have risen, some of this macro risk starting to pick up. I mean, Nvidia not only has to come out here, be big on earnings, the earnings call has to be long, and I want to hear positive things from CEO Jensen Huang when he hops on Yahoo Finance in the evening.
Yeah, they have to really nail it because so much is riding on this, because the market is really riding on the fact that the AI trade is the growth story here, that what is going to propel this economy forward is going to be AI and all the sort of cornerstones or touch points of AI. When you look at the markets with respect to XLI, industrials, utilities, everything that has been rising so far this year, I thought it was interesting that you saw Nvidia going higher yesterday. It was up about 3%, but then it ended the session up about 1%. You saw a little bit of a sell-off there towards the end. So we'll have to see what happens with the AI trade going forward, and also not just Nvidia after earnings tomorrow, but also other companies as well, other chip makers as well, and other sectors that are touched by the AI industry.
Caleb, it's pretty wild. Last word to you that the government now has a 10% stake in Intel. I mean, it's just wild. It's wild times, man.
Yeah, I don't know if we've seen this before, though. The government's been involved in other companies. Remember the great financial crisis, took positions in some of the big banks, took a huge position in AIG, but they did it in a time of desperation, not in a time to sort of boost the industry or get into the sort of the profit mechanisms of how these companies operate. It goes against free enterprise, and it goes against what you would think would be Republican traditions, but I don't think this is the same GOP that we've known for the past 30 or 40 years. So it's very interesting. And now the fact that they want a piece of the profits, a piece of the revenue from chip makers like Nvidia that want to sell to China, we're in dangerous waters, I would say. And we've seen this before in other countries. It doesn't always end well.
Definitely not the same GOP. A huge thank you to the opening bid roundtable today, Caleb Silver, Brooke DePalma, and Inez Ferre. Appreciate it. All right, straight ahead, we'll dive into the outlook for publishing giant McGraw Hill as children get ready to settle back into school and as the Trump administration continues its educational shakeup. We'll be right back with CEO Simon Allen. All right, welcome back to Opening Bid. Chatter is picking up on Apple ahead of its potential reveal of the iPhone 17 on September 9th. Bank of America analyst Wamsi Mohan isn't expecting a lot from the event, just a new iPhone Slim model, whatever that is. Says Mohan, past events have seen Apple stock pull back after the event, only to recover 30 to 60 days post-event. If Apple surprises with a compelling demo of Apple Intelligence, third-party integrations, or with any unexpected price increases, the stock may fare better than past events. Interesting stuff. All right, for today's Power Player segment, we're looking into a company that debuted in July amidst this year's IPO boom with a little less fanfare. Stock has seen since fallen below its IPO price, but the street is optimistic with 12 buys and 1 hold rating on the stock, according to Yahoo Finance data. With me today is McGraw Hill CEO Simon Allen. Simon, good to see you. It's been 5 years. Last time we talked,
Thank you,
it was
Brian.
during the pandemic. I was
Yeah, it's
talking
great.
out of my kitchen.
Yeah, same. It's great to see you live in person at your beautiful studio. It's lovely to be here.
Well, we appreciate the kind words. So look, we're getting
you.
ready to back into school, K through 12. Colleges are already back. What is the demand you're seeing for what you sell at McGraw Hill, and do people still even buy physical books anymore? Am I dating myself?
Well, just a little, but the demand is superb for us. Our business is generally now digitally delivered. Well over 2/3 of our business. In fact, in some segments like higher education, it's 92% digital courseware delivery through our platform. It's a tremendous way for us to make sure that we help students learn in a more personalized fashion. That's the key thing that's changed, Brian, that nowadays you have to find a way to engage the students. You've got to keep them interested, motivated to learn and to study. By making all of our material digitized for them, so they can personalize that process. It's critical. Demand is great for us. Education is a wonderful business to be in. Everyone needs it at every stage. We're the only company that goes through pre-K, K-12, higher education, and into professional. So we're feeling very good about our position indeed.
So you go public on July 24th,
Yeah.
and you come out. I mean, look, the IPO price was 17, like I mentioned at the top. It's now 14. You come out on August 14th, report earnings. Sales up, low
Yep.
single-digit percentage.
Yeah.
Adjusted operating profits up 7.2% year over
right.
year.
That's right.
What's the disconnect here in
Yeah.
the early going?
Well, that's a good question. We obviously feel very, very much that the stock is only going to go one direction, and that's up. That's my personal view. When you look at the initiation reports, you mentioned at the opening, there are a dozen of them that are saying that we will be substantially higher. I think the median range was in the low 20s. And we feel that we're going to get there certainly within the year, but faster actually. And for us, I'm focusing on running the business. That's what I need to do, making sure that we are continuing to take market share, making sure that we're serving educators at this critical time back to school and helping students learn as they need to learn. That is my core focus, and the price will do what it needs to do. The markets will correct and respond in the right way. For us, the opportunity is very, very significant.
Does the street not see you yet as a tech play in the age of AI?
I think, AI for us is a huge benefit. It's a massive tailwind. It has been for over a dozen years. We've created products through like Alex for mathematics and chemistry for over a dozen years. And for us, using AI, again, to allow the educators to reduce their administrative burden, help teachers then spend more time with the students, and then critically make sure the students can create that personalized journey. That's where we are now a software company. We are an information solutions company for education. A quick funny story, when we did the roadshow just a month ago, we would begin the session, they're normally an hour or so long. It's a character building process, let me tell you. And at the end of the hour, all of our investors would look at me and say, wow, you are completely different to what we expected. You are a digital solutions company. You offer all of the information material through the platform in a very personalized way for every student. We didn't expect that. And it really has transformed the company, and we are very, very different than we were just 10 years ago.
I recently talked to Education Secretary Linda McMahon, and she
Yeah.
told me that the DOE, she would like it closed by 2026. JP Morgan says that will make it more challenging for companies or publishers such as yourself to do business. Can you comment on that?
Yeah. We don't see that. We don't see it as a challenge. The DOE, for us, really, virtually all of the funding that we see across our markets is state and local driven. If you think of K-12, the funding is coming from the individual state and school districts, and we're in 99% of school districts across the country, so we know how their funding process works. When you think about higher education, it's the students or their parents that are paying. This is the DOE itself, kind of like tariffs for us. There are no macro activities that affect our company at all.
Is that a chaotic moment, though, to close an agency like this?
Not really. For us, in some states, they see it as a benefit because you're removing some of the bureaucracy. And for us, in many ways, our focus is always at the local level. It really is minimally at the Department for Education. So to us, it's kind of a non-event as it relates to the performance of our company.
The Trump administration has proposed 15% budget cuts for education in fiscal year 2026. What's the ripple effect in the education system for that?
Yeah. Again, the state individually, the states will decide the funding levels that are there. And it's important to remember that when you think about the state allocation for budgets for courseware, for the material that we provide, it's about 1% of the total state education budget. So we're pretty much immune from any changes that you see there, because every school, every student needs learning material. Every teacher needs the material that we can provide to help them understand, using our data, how their students are performing. So we see our future completely separate from any federal funding activity whatsoever. Our growth is very clear, our trajectory. And that's what our investors have seen. That's what, when we looked at the initiation reports, they see that we are a very resilient company.
One thing that, full disclosure, I didn't think of, JP Morgan, they mentioned two headwinds to your industry. One, lower birth rates and tougher immigration policies. How does that impact McGraw Hill?
Well, the second one is easy because we're a global company. We've got over 4,200 people, close to 1,000 of them are outside the US, so we serve all of the markets around the world. So if students decide to stay in their local country, then we will serve them there, and therefore we capture the students wherever they may be. The second issue on demographics, you have to remember that the average age of our student now, if you look at higher education, you're into the mid to high 20s. About 30% of our business in higher education is community college, and many of those students are in their 30s and up. And it's the number of 18-year-olds, yes, as they come in to four-year institutions, but for our business, again, you're seeing students come back later. So the actual demographic change is will have a minimal effect to our business completely. And we're seeing more, actually, from an immigration perspective. Enrollments are indeed increasing in some areas that people had not imagined.
This has really been an unprecedented first year for the administration, and even going so as far as to question things that are in books and what is being taught and what they would say is woke material in books. I mean, do you see that in publications and the things that you produce, whether it's digitally or physically?
We and most of our products are digitally produced. What we see is the need for us to work alongside individual states for all of our K-12 product, and they deliver and issue state standards. We obviously need to make sure that they pass muster in terms of our integrity, editorial integrity committees, and when we see that the standards and the requests for content that they have is absolutely in tandem with our values, then we of course create the material across every state as they would need to see it. Then the benefit comes of how we use pedagogy and learning science to help the students work and understand how they can best learn the material that's there.
How rapidly is curriculum changing because of these concerns?
Curriculum changes all the time. It needs to be, and it should change all the time. It needs to be modernized, and it needs to be relevant for students today. And we make sure that what we produce, and it's easier now because we're a digital company, what we produce is absolutely in tune with what customers need to see, including the most current information. We have to make sure that we engage that student and ensure that they are given relative and relevant material that helps them learn faster and gives them that opportunity to engage in the learning process.
Really enjoyed this chat. It's good to see you in person. It's been
Likewise,
way too long. I appreciate you coming on down. Simon Allen, McGraw Hill CEO. And a programming note, tune into Yahoo Finance tomorrow after the market close for full coverage of Nvidia's earnings results and our live sit-down interview with Nvidia CEO and founder Jensen Huang. Looking forward to that chat. Coming up, Ali Canal has you covered for Market Catalyst. We'll be right back.